All right, welcome back to the show, everybody. I am super excited to have my very first guest on our podcast, Fairways in Finance, Mrs. Sarah Spinelli, one of my favorite people, one of the smartest people I've ever known. Sarah is the production manager on our team. Sarah and I have an interesting story of how we got to know each other, and we've been working together now for over 2 years. So absolutely love Sarah. She has so much knowledge that she can share with everybody here on this podcast today. It's amazing how much she's learned in a period of 2.5 years in the mortgage industry. So very excited to pick her brain and get into her mind. Sarah, welcome to the show.
Thank you so much for having me, Jeff. I'm honored to be your first guest.
Yes, very excited for that. So tell everybody how did we meet? What was your journey into the mortgage business?
So, as you mentioned, it is kind of an interesting story. I first met you when I bought my first house back in 2018. I was actually referred to you by one of the referral partners we work with, a realtor, and had no idea what I was doing. Came in, you pre-qualified me. I had a consult and met you, got me into my first house, and then I didn't talk to you again for about a year or two. But then I was Facebook friends with you and saw that you were looking for an admin. And I was like, hey, I had a really good experience with this guy, and I'm looking for a change of pace from the industry that I'm currently in. So I reached out to you. We had a series of interviews. I started with the team. It was in February of 2020, so right before quarantine and the pandemic hit. That was a lot of fun. And I was your assistant for, I don't know, probably like 6 months or so. And then it turned out that I really had an affinity for the industry, and I moved up to your loan partner. And then as things have progressed, I ended up being your production manager. So it's been a journey. Over 2.5 years, definitely have had a lot of different hats, but it's absolutely been amazing. Like I said, turns out I really like this industry, so I'm glad I'm here.
Yeah, that's awesome. You were like way overqualified to be an administrative assistant. You absolutely kicked ass in that role. So it's like as you got, I was like early on, I knew right away. I'm like, she is way too talented for this role, and you were like the greatest assistant that I'll ever have. I can probably say that with a high degree of certainty.
Oh, thank you so much.
But yeah, no, that was awesome to see you progress through so quickly like that. What did you like as a consumer? If you can go back to before you bought your first house, before you got pre-qualified, how much did you know about the mortgage industry? And did it feel like a big mystery to you? Did you have an idea about it, or was it just like an onslaught of new information and words that were foreign to you?
It was an absolute onslaught. It was completely alien to me. I actually was so uninformed when I started looking for houses that I reached out to the realtor first. I'm like, hey, can we start putting in offers? He's like, are you pre-qualified? No, I'm not. Do you have a good lender? And that's how I ended up referred to you.
Yeah.
So, and even when I came to work for you, so I did have a better idea at that time because I'd already gone through the home buying process. But even so, every step of going through that first mortgage, no. Had I not had you to rely on, I had no idea what was going on.
Yeah. Yeah. So it's interesting to think about that because I've been in the business for 16 years. And even for you, 2.5 years in the business, it becomes a second language. And the mortgage industry, it literally is a second language. Like my dad was in the mortgage business. And as I got into the mortgage business, my mom and sister would always give us a hard time when we got together as a family because they'd make fun of us for quote unquote talking mortgage. Because if you're not in the mortgage industry, it literally sounds like a different language. And so I think it's easy for us to forget what it's like to be a first-time home buyer or even buying your second home where you know so little about the industry and we're so comfortable with it, it's a second language. So it's interesting to hear you say that. Yeah.
Oh, absolutely.
What, like, as you were going into that process, what do you think was your biggest fear about taking that step to acquire your first home?
Honestly, I was pretty young when I bought my first home, and my biggest fear was tying myself into something I was obligated to make payments on because then I was like, hey, if something happens to my job, to my husband's job, that's going to be worse than just breaking a lease. So my biggest fear was being able to actually afford it. But then when I really sat down and thought about it, I realized that, hey, the mortgage payment's actually less than rent because rent just kept going up. So it was worth it to take the plunge, and I'm so glad I did.
Yeah, that's awesome. I think that's a common thing that a lot of people think about. So, okay, so now it's going to be the next question. So when you bought your mortgage payment was less than what you were paying for rent.
Yeah, but it was about $500 less.
Wow.
Yep.
Yeah. So in today's market, that's not the case for a lot of people. It's their mortgage payment, is close to what they're paying in rent, maybe a little bit higher. But I think we're going to see that dynamic start to shift because we're looking at rental statistics, and the average rent in the U.S. right now is going up 18% year over year. So we're going to start to reach this point where rent is catching up to mortgage payments. And that's one of the things I like to talk to people about is, your mortgage payment may go up a little bit going from renting to buying today. But if you think about what your rental payment's going to be when you renew your lease next year, how does that payment compare to your mortgage payment, which you'll have for 30 years?
Exactly. And that's something I like to say to people as well, because we do have a lot of borrowers come in and they're trying to determine if they should continue renting or not. But the deal is the cost of living and the rent, it's going to continue rising. When you're on a fixed loan, your payment's going to remain pretty much the same. The only thing that really adjusts is if your homeowner's insurance or property taxes go up.
Yes.
And even then, it's not going to be a huge jump.
That's right. And everybody knows about the high inflation that we have right now. That's a hot topic in the media, in financial news, and we do have the highest inflation we've had in 30 years. So a 30-year fixed rate mortgage, that's the average person's best hedge against inflation because like you just said, you get locked in on a monthly payment. So say that payment's $2,500 a month. As we have high inflation, the value of a dollar is going down and your mortgage payment is staying the same at $2,500. So as that value of the dollar is going down, it effectively is bringing down your mortgage payment because $1 isn't worth what it used to be.
Exactly.
How has your life changed since that first home purchase?
Oh my goodness, it's been amazing. So like I said, I had the big fear of tying myself in with a mortgage, right? I don't ever do loans, essentially. Like I try to buy everything cash, but it's really nice because when I bought the house, instead of paying somebody else's bills with my monthly housing expenses, I was actually building equity in my house. So I bought the first house in April of 2018, and then I sold it last summer, July of 2021. And in that time, the value had appreciated over $160,000.
Wow.
So making those monthly payments for a little under 3 years, and hey, I walked away netting, over $160,000, which was amazing because I got into that first house with very little down, first-time home buyer. So I really, it was a big return on investment. And that's enabled me to move forward, upgrade, my house now, my living style. I've been able to do things that I wouldn't be able to afford before because you build wealth when you buy a house, like you build that equity and then you can free it up and you actually have freedom to do things that you couldn't before. I get to take my family on vacations now. I get to buy cars that I couldn't have even thought about buying before. So it's a first step. And like I said, got into that first house for very little, but that tiny investment that I made over 3 years, it exploded exponentially.
That's crazy. Yeah. That's so awesome. Yeah. $160,000 in 2 years.
Mm-hmm.
So when you bought that house, you did a down payment assistance loan, right?
I did not.
You didn't. You did it. I did the loan. I can't even remember. That's bad.
It's been a couple of years. It's okay. No. You were very knowledgeable. Once again, I had no idea what was going on. I just knew that I had very little money to get into a house, and you kind of walked me through the pros and cons of down payment assistance versus at that point, an FHA loan made the most sense because my credit wasn't very high. So the interest rate was, best for me there. The mortgage insurance premium was lower. As we know, with down payment assistance programs, the interest rates are significantly higher than they are on a conventional conforming or FHA or VA loan. So I ended up using an FHA loan, 3.5% down, had seller concessions to help cover with closing costs because the market was way different in 2018 than it is now. Seller concessions are pretty much unheard of in this market. But yeah, I think I got into my first house. I bought it for $200,000. I think I $7,000 out of pocket. That's literally all I paid to get into that, and then walked away with over $160,000 when I sold it last year.
So you took $7,000,
yes,
put it down on a home,
mm-hmm.
turned it into $160,000
yes.
in 2 years.
Mm-hmm.
And then on top of that, you had all the benefits of owning your own home, the pride of home ownership, the stability of not having to worry about a landlord not renewing your lease, being able to modify and upgrade the home however you please.
Oh, absolutely. And I also had the joys of replacing large things in my home. Bought the house in April, and the air conditioner unit went out in August. So that was my very first repair. Did a lot of modifications to that house in the 2.5 years I was in it, though, and it is really cool because you don't need to have anybody's permission to do so, and you're free to do what you want as long as it's on the inside. If you're in an HOA, you got to watch out with the outside.
Yeah.
Yeah.
Actually, I love that you brought that story up. So you bought the house in April, and then the air conditioner went out in August.
It did.
Okay, that would be like so many people's biggest fear with a home purchase is I'm going to buy this house and then I'm going to get saddled with some kind of huge repair expense. So how did you guys deal with that? Like, how much did it cost? What did you do? How did you handle that?
Yeah, so great question. We didn't have the cash to pay for that up front, so we ended up financing it. We had good enough credit, and the only loan we had then at that point was the mortgage. So we financed, it was a $7,000 air conditioning unit, 3-zone system in this tiny little house out in Santan Valley. It was very ridiculous, but I did love that house. So I ended up doing like a 10-year financing on it and paid it off in like a year and a half, just made extra payments each month so we didn't have to carry that with us because we didn't want to have to, keep paying on it after we moved out of the house. That wouldn't make any sense. Yeah, but that's something that people do need to be aware of, when they're considering a home purchase. Hey, I think the average statistic is you want to, set aside about 3% of the house's purchase price for like annual repairs and updates, that type of thing. Budget for it or plan for it because they do happen. I can't tell you how many things. I had to replace my entire landscaping system. Yeah, so I think over the course of the 2.5 years I was there, I probably dropped somewhere close to 25, 30 grand on repairs, updates, that type of thing.
Yeah. Okay. So that's great. So you put in 7, you spent 25 to 30. So you were 30 to 35 grand that you invested, and then you walked away with 160. So
Yes.
you netted around 125, 130 in 2 years. I'd still take that.
Oh yeah, no, absolutely. That was amazing.
Yeah. How you had mentioned credit, like thinking about, where your credit was when you bought that first house and then fast forwarding to buying your second house, like how did having a mortgage help your credit?
Well, it gave me credit history. I never missed any payments. And when you have a loan like that, an installment long-term loan, the longer you have it, the more of an impact it has on your credit. And when you make all of your payments on time, you don't have any lates, that just helps build your credit profile. I also had a couple of credit cards, when I had applied that were maxed out, which I don't recommend applying. If you're maxed out, it does not help your score. But just with that mortgage, it kind of gave me like, okay, I'm tethered here. So I have to make sure that I'm planning for these payments and I need to get everything else in line. When I applied with you for my first home loan, I think I was at a 702. And then as of yesterday, I'm at an 803.
That's amazing.
Yeah.
That's so awesome, Sarah.
Thank
You've done
you.
an amazing job with that. Well, one of the things I remember too from getting to know you is, that house out in Santan Valley, that was the area that you guys could afford at that time.
Yes.
And then the goal became, hey, I want to get out of Santan Valley because I don't like the commute. And, it's difficult driving in and out of there, taking your son Lucas to school.
Yes.
But you guys made the decision that buying the home and investing in real estate was the most important thing, even if it wasn't in your perfect location. And then you were there for a little over 2 years, and then you were able to take that profit, roll it into the down payment on a house in a location that you really wanted. So tell me about the location you have now.
Yeah, so that's a great question. As you mentioned, I was out in Santan Valley, Ironwood, Nakatillo. So it's a really nice area, but the commute, there's always construction out there, single lane roads, and it would take me about 45 minutes to get from Ironwood, Nakatillo to get to Lucas's school, which is on Greenfield and Germain. So now I live in Power Ranch, and my drive to Lucas's school is only about 5 minutes. It's about 1.5 miles away. That's pretty fantastic. It's cut down on a lot of my stress. I do not like driving, especially when there's construction. It puts you in such a foul mood. My quality of life has really improved since I don't drive as much. But it's really nice for Lucas too, because all of his friends that go to that school, they live in the Power Ranch area. It was like, he's an only child. I couldn't have him, have play dates when I lived clear out where I did. It was just too much of a hassle. Now we've got people over all the time. Like his friends are over. We have, they're playing video games. He's going for sleepovers. So that's great. And as an added bonus, our office here is only about 10 minutes from my house.
Yeah, that's awesome.
It really is.
So would you do that again? If you had to do that again, was that worth it?
Oh, that was absolutely worth it. That's probably the biggest improvement I've had in my life in the past, couple of years.
That's amazing.
Yeah.
Yeah, I love that story. I appreciate you sharing that. I love that story.
Yeah.
Thinking about, so let's switch gears to like what we do. So we help people get that financing for a home and get into a home purchase. What do you like most about your job in the mortgage industry?
There are so many things I love about this job, but hands down, and I think I've told you this every time we've discussed this, my all-time favorite thing is making that dream of homeownership happen for people. Or even refinancing when it makes sense, getting somebody into a better financial position than they were in previously. It's such a huge thing because it really is the American dream, right? Own a home. It's one of the biggest milestones, in my opinion, that you can do in your life. A lot of people, it's marriage, kids, but home ownership, that's a pretty common one that it's it's almost magical making it happen for people, especially people who think they can't do it. One of my we had a borrower, it was about a year ago or so, and when they first applied, they didn't qualify due to credit. Worked with them for about a year, got them pre-qualified, they got under contract, we closed on their house like the same day they found out they were having their first baby. So it's stuff like that. It's amazing. Like being able to have an impact on people's lives and make a difference. That's something that's really important to me, and I think that we're in a great position to do that.
Yeah, that's awesome. I love that. Yeah, and I feel the same way. I'm somebody who, I get motivated by opportunity to earn and, kind of have a self-employed type of job. And so the mortgage industry isn't the only place that you could do that. There's a lot of different ways you can do that. But the reason I've stayed in the business for 16 years is what you just said. You're doing something for people that really matters. You're affecting their family. You just, even with your story, you're affecting people's entire life, their lifestyle, where they live, what they're able to do. It really changes people's lives. So to be a part of that process and be able to offer something that means so much to people is pretty cool.
It really is.
What if you were talking to someone who's just in the beginning of trying to figure out, should I buy a home? Can I buy a home? When should I buy a home? What would you tell them to do to start preparing and getting themselves toward a place where they could pre-qualify and purchase a property?
Great question. So the first thing I would say is, hey, take a look at what you've got as far as your assets go. So available money, essentially, you're going to have to put towards this home purchase. Also take a look at how your open accounts on your credit are. Like if you have a lot of credit cards, are you maxed out on those? What's your monthly payment on that? Take a look at your income. The primary thing is, hey, when you're getting ready to apply for a house, don't go opening new lines of credit. That's a bad idea. Just please don't. Make sure that you don't have high balances on any credit card accounts, that type of thing, because what a lot of people don't understand is the debt to income ratio calculation. So I would also tell them, hey, here's a basic way you can kind of get a ballpark idea of what your debt to income is at, because with lending, of course, depending on the program, we're capped at a certain percentage for debt to income ratios. So a lot of people don't understand, hey, when you have, five $70 credit card payments a month, we have to count each of those credit card payments. It's $350 that we have to take out of your qualifying income. So take a look at your expenses, cut down where you can. Definitely don't go opening new accounts and start saving. Because it does, for first-time home buyers, conventional loans, you can get in with as little as 3% down, FHA 3.5%. And then there, of course, are some down payment assistance programs, but those you still have to have some cash in hand to be able to close. Closing costs. So my number one thing is, hey, get your finances in order, create a budget, start saving, start planning, start paying things down if you have high balances on some accounts, because that's going to impact you when you apply.
Yeah, I think that's great advice. Yeah, and especially the credit cards that are a higher, what's called revolving utilization. So
Yes.
revolving utilization is the percentage that you owe of the available credit line. So if you have $1,000 credit limit on your credit card and you owe $750, you're at 75% revolving utilization. When you get over 25% of the credit limit, it starts to have an impact on your score. As you get over 50, then it's more. Over 75, it's more. 90 and plus, then it's really hurting your credit score. Even a small credit card, $1,000 limit credit card, and you owe $950, that can tank your credit score.
Absolutely.
Yeah.
I've made several credit plans, helped several people out where they're at that, 75 to 100% utilization. They pay that down, and then their score goes up. I've seen it go up 20, 30, 40 points just by paying that one card down.
Yeah.
High credit utilization on revolving accounts, so those credit cards for, mortgage, right? Different language. A lot of people don't understand revolving. That's the credit card accounts. High utilization rates, that's going to affect your score. And hey, you know what your score is going to affect? The available interest rate that you can qualify for when you do go under contract. You want a lower interest rate if you can get it, and I know we're in a rising rates environment, but it definitely helps to have your credit score at its optimal point, and then, that's going to get you the best rate.
Yeah, totally. And I think something that, a couple things. So back to debt to income ratio. That's one of those mortgage language terms that's, that you did a great job with that. And, debt to income ratio, again, because this takes several times to hear it to get it down. It's you take the minimum payment on any debt that you currently have, and you add all those up, plus the new mortgage payment, and you divide that by your gross monthly income, so your pre-tax income. And that percentage is what we call debt to income ratio. A lot of times people think that they have to be debt-free when they buy a home. What would you say to that person?
That is absolutely not accurate. I mean, it would be nice to be debt-free when you're buying a home because nobody wants to carry around debt, right? But once again, having, those accounts is going to help you build up a strong credit profile. But no, you don't need to be debt-free. You need to make sure that you are utilizing what credit you have wisely, not overextending yourself, because that's going to look really bad on paper.
Yeah, that's great. Okay, that's awesome. So say now somebody's gone through the initial stages of being like, should I buy a home? Do I want to buy a home? And now they're like, okay, I want to buy a home. Take us through what is our process on our team for getting someone from A to let's call it like L. No, so not all the way through to closing, but just that pre-qual process from when they first get referred over to us giving them a pre-qualification letter. How does that process work, and what are some of the things that we do that would differentiate us from other mortgage lenders in that process?
Yeah, so that's a great question. Our process is a lot of fun. So whenever we receive a referral from one of the many wonderful referral partners we work with, love them. Our business is 100% referral based. We're going to get the information for this borrower who wants to apply, see what they qualify for. First step is I'm going to be reaching out to them for an initial consultation. It's a phone call, it takes about 15 minutes or so I'm going to be the very first person they ever make contact with, which I think is really exciting because I get really excited when people want to buy a house. I mean, it's like I said, a huge milestone. I'm going to call our borrowers. I'm going to answer any questions they might have, and then I have my own list of questions to gather some information about them that I'm going to take down. From there, what we do is email our online application link along with a list of documents we'll need to our borrowers. And then our turnaround time for pre-qualification review is about 24 to 48 hours, business hours. So I'll answer the client's questions. I'll send them the application. I will follow up with them 2 days after I send it if it has not already come in to see if there are any questions I can help, with on the application, help answer. And maybe navigating it's a little bit confusing. So once they submit their application and documents, either myself or one of our other two loan partners, Sarah Caton or Brandon Liker, we will review that application. I'm going to take another view at it. We're going to issue that pre-qualification, send it to the borrower, congratulate them, send it to their agent they're working with, and we're going to get them scheduled for a Zoom consultation with you. And the fun part with the Zoom consultation is when we issue our pre-qualifications, we max out borrowers at the very tippy top purchase price that they can qualify for. Not everybody wants to go up that high, but it's nice for them to know that they can. So when you have your consultation with them, that's when you take them through our loan process from essentially when they go under contract to close. You go over all the underwriting, all of the processing. We also do fee sheets, so you can go over the different numbers with that day's market rate to give them an idea of what their monthly payment's going to be at this purchase price with this much down. And that, I think, is really important to borrowers because a lot of times they don't understand kind of everything that goes into a monthly mortgage payment or like cash to close. You're like, okay, I have a $20,000 down payment. That's all I have to pay, right? Well, not necessarily because there are closing costs as well. So the consult, that's when you really get into what they're looking for after they're pre-qualified. And then after the consult, well, hopefully they're out there with their agent making offers on houses.
Yeah. That's awesome. So let's unpack that process a little bit. I think one of the hardest things for people with a mortgage is the paperwork part of it. So, coming to a mortgage company like us to get pre-qualified, it's not quite as painful as going to the dentist. It's close, but I think we're pretty good at being gentle, and we'll give you some Novocaine if needed. But how important is it to get all of the paperwork from our applicants when they're pre-qualified? Like, does it really matter? Do you really have to have those pay stubs and bank statements, Sarah? Or could I just tell you what I have and then I can get a pre-qualification? Why do I need to give that to you?
That's a fantastic question. And yes, first off, it is very important that we have all of that documentation up front because we need to thoroughly review it. The deal is, you can tell me what your situation is. You can tell me how much you're making, how much you're paying. However, we are a government-regulated industry, and we have to go by an underwriting checklist, essentially, for qualifying people. Fannie Mae, Freddie Mac, the Department of Housing and Urban Development, they all have their different guidelines. We have to make sure that your documentation is going to make sense to the underwriter. So Fannie Mae, Freddie Mac, the HUD, they will actually be able to back your loan when you go under contract. If we have inaccurate information, we issue a bad prequal because we don't have all of your documents. Guess what happens? You go under contract and then we can run into some trouble in underwriting. Ultimately, I'm asking for all of your documents up front because I want to make sure that we can get your loan approved. I want to get you into your home. That's the whole point to it. And yeah, maybe sometimes it is kind of painful, but I like to think that I'm gentle with people up front. I really do. I promise I'm not going to, follow up with them too much, but I do follow up with them enough. Like, hey, I know you want this. I need this. And then as soon as you get it to me, great. And some people, it is a little bit of a struggle, especially after COVID. Everything we do is pretty much online now. So not all of the people who are buying houses, they're familiar with that type of process. So I've had several borrowers who, might have not bought a house since like 1980. There's this really cool screen share option we can do with the application with them, and I've actually walked through it with them. I'm going to go above and beyond to make it as easy for you as possible. If I have to take your application over the phone and manually enter it myself, that's also okay, but I still need your documents. So I'm going to ask you to either get those to me. You can bring them in person, come see me. I'd love to meet you. You can ship them to me. I'll send a courier to you. Either way though, need the documents. Need to make an informed decision while I'm issuing your pre-approval so we can make sure that we can approve your loan when you go under contract.
Yeah, that's awesome. And getting the documents is not a requirement for a pre-qualification. So there are lenders out there who will give out pre-quals without having received all of the documents from a buyer. And so that puts them in a dangerous position. And I'll give an example of what could happen with something like that. So say a client sends us a screenshot of their Bank of America accounts, and they've got, and it shows the balances in a couple checking and a savings, and they've got enough money to cover down payment and closing costs. We might say, great, you've got enough money to qualify. We don't need your full bank statements. Here's a pre-qualification letter, have at it. And then we get their bank statements now they go under contract. We get their bank statements from them because we have to have those with all pages. And so now we start looking at the bank statements, and there's a very large cash deposit that is a loan from an acquaintance of theirs to make the down payment. And we can't source that money. Now all of a sudden they don't have eligible assets to close on that home. And it's something that we could have uncovered up front had we got the full bank statements, but we didn't get the full bank statements. And now there's a buyer under contract with an earnest money deposit of thousands of dollars. They may have paid for a home inspection, $500+. They may have already paid for an appraisal, $700-800. So they're into this thing for thousands of dollars, and they are potentially on the hook to lose all that money simply because we did not get all pages of a bank statement up front. And so it can be as simple as that I think people don't realize these little things can make a transaction explode if we don't do a thorough job up front. But not everybody that is in our industry follows it to that degree. And so I think that's super important for lenders to go to that level of detail.
Oh, I absolutely agree. And I think that's part of what sets us apart from other lending companies because as well as I do, we've actually had a borrower or two in the last year who was with another lender and then the other lender couldn't get their loan done. They've come to us. Hey, we've closed those loans that have come to us. It's very important to me, it's very important to you and to our team to make sure that we can guarantee our pre-qualifications are solid because, once again, that's going to affect the whole process. Don't want to have you under contract, have something go sideways in underwriting, have you lose your earnest money, anything like that. So yes, it is a little bit tedious up front when I'm asking for all of these details, all this documentation, but I promise it's for your own good.
Yeah.
It really is.
Absolutely. Yeah. So what would you say? Well, actually, let's talk about this for a second. So now the client goes under contract. What does that loan approval process look like? Once they've got an accepted offer on a home, now what do we do to get them through to closing on the home?
Also a great question because for a lot of people, especially if they haven't, done a loan recently, there are several steps to the process. So the first step is, hey, we received your contract. We're going to call you and say, congratulations. We are so excited for you. What we're going to do here is set up your contract and issue your initial loan disclosures so we can get your intent to proceed. And then we're going to work on packaging your loan up to send to our processor, who is kind of our middleman between us and underwriting. At that point too, I'm sorry to say I'm going to be asking for updated documents. So please just expect that, because that's underwriting is going to ask for them. I'd rather get them up front. So after we get your loan, your disclosures out, you sign those, we send your loan to our processor. Our processor packages it up for the initial round of underwriting, because there are 2 rounds. So your loan's going to go in for initial underwriting after our processor has it all packaged up. Our underwriter is going to review it, and they're going to say, okay, this loan is approved pending these conditions being satisfied. With conditional approval, that's round 1 of underwriting. It's called initial review. We're going to get your loan back, and the underwriter is going to say, okay, so loan approval, but we need an updated pay stub, updated bank statement for this account, that account, or this date. Conditions can vary. Some loans come out with minimal conditions. Some come out with a little more. It kind of just depends on your borrower and, what their employment is, what their assets look like. But essentially, once we get that file back conditionally approved, we are going to reach out to you, and we are going to ask you for those updated documents to satisfy those conditions. And then once we've collected all of those from you, we're going to resubmit your loan to our underwriter for the second and final round of review, and they're going to final approve it. Once we're final approved, awesome, we're going to get our closing department involved. We're going to send out your documents to title. Title is going to call you to schedule your signing. You're going to sign, you're going to get your keys, you're going to own your home. That's kind of a high level view of it. But just so our borrowers are aware as well, I mean, for those who are repeat borrowers, they know this by now, but we're going to call you every Tuesday too with a status update. And we're going to call your agent to let you know where you are in the loan process. I think one of my favorite things about my home buying process with you was the high level of communication. And, you were available when I needed to call in between Tuesdays as well. And that's what we offer to our borrowers, which I think is important, because a lot of people really don't know what the process is like.
Yeah, I totally agree. Yeah, and over time we've refined this process, because the biggest complaint that most people have with the home buying process, whether it's with their lender or realtor or title company, is lack of communication. So They feel like they don't know what's going on, and they don't know what the next step is, and then that creates anxiety and fear about what's happening, and they feel like we're not doing our job. So I've always come at it from the mindset of, if our clients aren't hearing from us, the assumption is that we're working on somebody else's file. And that's almost never the case, but that is the assumption that everybody would make. And I do the same thing when I'm a consumer. That's just how you think, because you're thinking about your own transaction. So that's why we always call every single Tuesday with a status update, whether or not we have an update on that day, so that our clients know, hey, we're thinking about you, we're working on your loan, we're here, and then we're always available outside of those days, like you said. How long does that total process take once you're under contract through to closing, generally?
Contract to close for a purchase, it's around 30 days. A lot of it is depending in the current market on the appraisal turn times, and if your property is going to require an appraisal, which we don't get to make that determination. That it's actually made by our automated underwriting systems. It's either going to be desktop underwriter for Fannie Mae or loan product advisor for Freddie Mac. And those are what's going to take a look at the subject property, the home you're purchasing, and tell us, hey, it's eligible for a waiver, which cool, no appraisal, or hey, you need an appraisal. So right now we're seeing turn times for appraisals vary wildly. I've had some return to me within about a week and a half of ordering them. I had one last week that took 4 weeks to get the report back, which was absolutely ridiculous. But it's just, that's out of our control. And that's one thing that a lot of borrowers and even agents aren't necessarily aware of. We cannot directly communicate with the appraisers themselves. It violates AIR compliance. So we have to go through appraisal management companies. So that's, I would say though, 30 days from start to close once you got your contract accepted. If we can close it sooner, we absolutely do. But 30 days is what we aim for.
Okay. Yeah, that's great. What about, and I think we've kind of already addressed this a little bit, but what would you say is like one of the most common misconceptions for the average borrower going through that approval process? Like, what do they not know heading into it?
Oh, that's a really good one. There are a lot of just varied misconceptions that I've seen. A lot of times they don't understand that it's not just a one-stop like stamp and approval on it. They don't realize there's so many parts to the process that it has to be reviewed and certain things have to be met. Another misconception is that, hey, we actually do have the ability to speed things up when there are things like appraisals that are out of our control, which unfortunately we don't. But it varies by borrower.
Okay. Yeah, that's great. Yeah, I agree. And I think too, like, there's oftentimes a lot of questions as to, like, why do you need all this stuff? Why are you guys asking for this stuff?
Yes.
And what do you say to people when they say that?
I get that one all the time. And it's a fair question because there are, each borrower is unique. The scenarios are never, the same every time. It's not cookie cutter. So when somebody's like, hey, why are you asking for this information? Why are you asking for this document? I actually go in and explain to them, once again, government regulated industry. We have to meet the Fannie Mae, Freddie Mac HUD guidelines for as far as, loan approvals. But also there are some things like we have a program on our back end that it's called Data Verify. That might pop up and, ask if you have any relation to an address, and they'll give us an address and you're like, I have no idea what that is. All right, cool. We're going to write up a letter of explanation saying you've never lived there. Or, okay, well, I was living with my parents for a couple of months, back in college. All right, cool. But I remember I had one borrower who she's like, why do you need that information about that specific address? I'm like, well, it popped up on a program. She's like, well, what program? So then I had to go and, hey, it's part of, it's a fraud audit services. It's, it's essentially like prevention for any fraud, that type of thing. So people don't understand that there's like that type of stuff on the back end either. I think they think that it's just like, oh, hey, we count the funds, we calculate the ratios, and they're good to go. No, there are compliance things that have to be met as well. So anytime somebody's asking why we need something, I'm going to explain to them exactly why based on the situation, what the regulation is.
Yeah, that's great. And that gets back to what we were just talking about with communication. I think that's the communication there. It's kind of like falls into two most common buckets: lack of frequency of communication, and then lack of like explanation and education with the communication as to like, why do we need these things? What are we doing with it? Why has this come up? All of those questions are like valid questions that pop up in people's mind. And if they don't get the answer to it, they feel like the lender's like dodging them, or if the lender's not able to answer those questions and articulate a clear answer, they also get those same feelings, even if the lender's trying their best to do it. So that part of it is so important in terms of how that experience is going to go for a buyer. And I always like to use the example of people like, if you give us your bank statement, and on that first page, the bank statement says page 1 of 7, we need all 7 pages, even if the last 2 pages are basically like tiny little CYA regulation font from the bank, and it has no numbers of your bank's account on it whatsoever. We have to have those pages. And the reason is Fannie Mae, Freddie Mac, the regulating bodies in this industry require that we have all 7 pages. And it's just as simple as that. It's not us. We have to follow those regulations.
Absolutely. It's not that we want to. Trust me. It's that we have to, and that's the only way we can get your loan approved.
Yeah. We don't want to make you do it, but we have to make you do it.
Yep.
Okay, so one final question for you. Just this would go, outside of mortgage lending specifically. Just anything. What and this is a question I'm gonna I want to ask our guests consistently this question at the end of every podcast, because I'm really big on systems and processes and following routines and creating habits that help me to hit my goals. So I'm kind of a routine-oriented person by nature, but I've been very careful with how I set up my morning routine and what I do on a weekly basis and a daily basis to try and make sure I'm hitting the things that I want. One of my favorite quotes is from Tom Brady, and he says, "Form great habits and then repeat them every day." And that's the key to success. And so what is one system or process or habit that you have in your life that you feel like has really helped you?
Yeah, so that's great. Love Tom Brady reference. He retired for all of 3 or 4 weeks and he's back. So no, he's got that great habit formed, and good for Tom. Yeah, playing for the Buccaneers. Yeah, so I'm the same, routine oriented, and honestly, I am happier when I have a routine, because when I don't have structure in my life, I get very stressed out. So one routine that's really worked for me, I wake up every morning at 5 in the morning, and I get up and then I go to the gym and I come back and shower. I get my kid ready for school, feed him breakfast, drop him off at school, and then I hop on work. Not having that structure in the mornings, during summer break, it's absolute chaos because I don't have to get him ready and get him to school. So it's okay, I feel lost. So having just a set morning routine, and then, making sure that I'm sticking to that, it's improved my, my happiness, my well-being, all of that. So something like that.
That's amazing.
Yeah.
I appreciate you sharing that. Sarah, thank you so much for coming on the podcast, sharing all of your knowledge and wisdom. I think it will be very apparent to anybody who listens to this why I think so highly of you and why you do such an amazing job for our team and our clients. And really enjoy working with you and spending time with you. So thanks for taking the time.
Hey, thank you so much for having me, Jeff. It was great. You know, I love working with you, and I'm excited to continue to do so. And we're going to make it to the next level. We're going to keep growing.